Given the bullish price forecast for Bitcoin and the upward trend in historical prices, a long-term investment strategy appears to be favorable. The forecast suggests consistent price growth over the next 7 days, reaching potentially significant highs. We should aim to capitalize on this anticipated upward momentum. Therefore, a long position at the entry price of $90,500 is recommended. This price point allows us to enter the market before the predicted surge. To manage risk, a stop-loss order should be placed at $89,800, below the recent price action. This provides a safety net in case the market unexpectedly reverses. The target price is set at $98,300, aligning with the highest point in the forecast. This ambitious target capitalizes on the full potential of the predicted price increase while offering a substantial profit opportunity. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a volatile pattern with a recent upward trend, currently hovering near its support price. The forecast indicates a continued upward trajectory, suggesting potential for growth. Therefore, a long position is advisable to capitalize on this potential. A suitable entry price would be around $3,180, aligning with the recent price action and providing a buffer above the support price. The stop loss should be placed at $3,070, protecting against a significant downside move. The target price could be set at $3,400, reflecting the potential upside indicated by the forecast and aiming for a healthy return. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the Ripple price history and the provided forecast, a medium-term investment strategy appears to be the most suitable approach. The historical data reveals a clear upward trend, with the price consistently reaching new highs. While the forecast suggests a continued upward movement, it also indicates a period of consolidation before reaching the next significant resistance level. Therefore, a long position is recommended for a medium-term investment horizon. A suitable entry price would be around $1.15, aligning with the current price and providing room for potential price appreciation. The stop loss should be set at $1.10 to mitigate potential downside risk, while the target price could be set at $1.60, reflecting the upper end of the forecast range and allowing for substantial profit potential. This strategy capitalizes on the bullish momentum while managing risk effectively. Given the price trends and forecast for Solana, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the expected upward momentum. The historical prices show a consistent upward trajectory, with the current price near its forecast and close to the support price of $235.38. The resistance is at $256.89, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. For this strategy, an entry price of $250 would be ideal, aligning with the forecasted price and providing a buffer below the current market price. The stop loss should be set at $236 to protect against any unexpected price decline. The target price should be set at $260, allowing you to take profits before the market potentially reaches its resistance level. This strategy balances the potential for gains with a reasonable level of risk, making it suitable for a moderately aggressive investor looking for short to medium-term returns in Solana. Given the price trends and forecast for Cardano, an investment strategy focused on a long-term approach appears promising. The historical price data demonstrates a consistent upward trajectory, with the recent price hovering near the support level of $0.914. The forecast indicates continued growth, with prices projected to reach $1.16 by the end of the 2-week period. This upward momentum, coupled with the historical performance, suggests a strong likelihood of further price appreciation in the medium to long term. Therefore, a long position is recommended for Cardano. An ideal entry price would be around 95 cents, allowing you to enter the market slightly above the current price and below the projected resistance level. Setting a stop loss at 88 cents provides a buffer against unexpected market reversals, while a target price of $1.20 allows for substantial profit potential should the forecast prove accurate. This strategy capitalizes on the positive price trends and projected growth of Cardano, positioning investors for potential long-term gains. Based on the provided price information for Coin, a bullish investment strategy appears suitable. The historical price data reveals an overall upward trend, with recent fluctuations around the $3.60 mark. The forecast suggests continued growth, with prices projected to reach around $3.80 within the next week. This positive outlook, coupled with the support price of $2.0879, indicates a strong foundation for potential price appreciation. Therefore, I recommend a long position in Coin. An optimal entry price would be around $3.60, aligning with the current price and the support level. A stop-loss order should be placed at $3.50 to minimize potential losses if the price unexpectedly reverses. The target price could be set at $3.80, capitalizing on the predicted price increase and ensuring a healthy profit margin. This strategy aims to capitalize on the short to medium-term bullish momentum of Coin, leveraging the positive price trends and forecast. Given the price trends and forecast for Filecoin, an aggressive investment strategy would focus on a long-term approach to capitalize on the upward momentum. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the support level of $4.271. The forecast suggests Filecoin could rise to $5.12 over the next week, indicating a bullish outlook in the short to medium term. The resistance level at $6.128 presents a potential ceiling for price growth, but the current price suggests there is still room for upward movement. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $4.40 would allow you to buy in at a price close to the current market value while still benefiting from the anticipated upward movement. The stop loss should be set at $4.25 to protect against any unexpected price pullback. The target price should be set at $5, aiming to capture a significant portion of the projected price increase while leaving room for further potential growth. This strategy balances risk and reward, allowing for potential high returns while mitigating the downside. Given the historical price data and the provided forecast for Theta network, a bullish strategy appears promising. The historical prices demonstrate an upward trend, with recent fluctuations around the $1.70 mark. The forecast projects continued upward movement, reaching as high as $1.84 in the coming weeks. This suggests that Theta network is poised for further price appreciation. Therefore, an investment strategy for Theta network would involve a long position. A suitable entry price would be around $1.72, aligning with the forecast and offering a potential entry point just before the anticipated price surge. A stop loss could be set at $1.64, below the recent support level, to minimize potential losses. The target price could be set at $1.84, aligning with the highest forecast price, allowing for significant profit potential if the bullish trend persists. This strategy capitalizes on the positive momentum and projected growth of Theta network, aiming for substantial returns in the short to medium term. Given the provided price history and forecast for Dogwifhat, a cautious long-term investment strategy appears most suitable. The historical price data shows some volatility but generally trends upwards. While the forecast indicates a slight increase over the next week, the support price at $3.051 provides a solid foundation for potential long-term growth. Therefore, an investment strategy would involve entering a long position at the current price of around $3.21, with a stop loss set slightly below the support price at $3. The target price could be set at $3.86, aligning with the recent historical high and factoring in the potential for continued upward momentum. This strategy prioritizes capital preservation with a defined stop loss while aiming for moderate gains over a longer time frame. Based on the provided historical price data and the one-week forecast for Stellar, a bullish investment strategy appears promising. The price history demonstrates a clear upward trend, with significant price jumps throughout the period. The forecast reinforces this bullish sentiment, projecting further price increases over the next week. Considering these factors, a long position in Stellar seems advisable. To execute this strategy, we can set an entry price at $0.300, aligning with the projected price increase. A stop-loss order should be placed at $0.270 to limit potential losses in case of an unexpected price reversal. The target price can be set at $0.380, aiming to capture a substantial portion of the anticipated upward momentum. This strategy capitalizes on the bullish outlook for Stellar, aiming for significant returns within a relatively short timeframe. Based on the provided information for Starknet, a medium-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend with both upward and downward movements. While the forecast suggests a slight upward trajectory, the recent price action has been relatively volatile. A medium-term approach allows for capturing potential gains from the anticipated upward movement while mitigating the risks associated with short-term volatility. An entry price of $0.471, aligning with a recent price high, would be appropriate. The stop-loss should be set at $0.433, the lowest price point in the recent history, to protect against significant downside risk. The target price could be set at $0.549, the highest price point in the recent history, aiming to capture potential gains from the forecast upward movement. This strategy allows for a balance between risk and reward, capitalizing on the potential for growth while safeguarding against substantial losses. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a medium-term approach to navigate the potential volatility. The historical prices show a recent downward trend, with the forecast indicating further declines in the short term. However, the support price at $4.254 suggests a potential floor for the price, indicating a possible buying opportunity in the medium term. Therefore, a long position is advisable with an entry price around $4.89, slightly above the current price and below the resistance level. The stop-loss should be set at $4.254, aligning with the support price to minimize potential losses. The target price can be set at $5.446, the resistance level, aiming to capitalize on a potential price rebound. This strategy allows for a medium-term investment horizon, allowing the price to potentially recover and reach the resistance level while mitigating risk with a well-defined stop-loss. Based on the provided price information for Render, a short-term investment strategy appears to be most suitable. The historical price data reveals an overall upward trend, with the recent price hovering near the resistance level of $7.878. However, the forecast suggests a slight pullback in the coming week, indicating a potential opportunity for a short-term profit. Therefore, a short position is recommended, aiming to capitalize on the anticipated price correction. An ideal entry price would be $7.65, aligning with the recent high and the beginning of the potential pullback. The stop-loss should be set at $7.88, slightly above the resistance level, to protect against unexpected price surges. The target price should be $7.34, a conservative level that allows for profit-taking while respecting the support price of $7.185. This strategy aims to capture a short-term price dip within the established support and resistance levels. Given the price trends and forecast for VeChain, an investment strategy focused on a medium-term approach appears to be most suitable. The historical prices demonstrate an upward trend, although with some volatility. The current price is near the support level of $0.02448, suggesting a potential buying opportunity. The forecast indicates a bullish outlook, with prices expected to rise towards the resistance level of $0.03928. Therefore, a long position is recommended to capitalize on this potential price appreciation. An entry price around $0.0260 would allow for a comfortable margin above the current support level while still capturing potential upside. The stop loss should be set at $0.0245, slightly below the support price, to minimize potential losses. The target price could be set at $0.0370, aiming for a significant portion of the projected price increase. This medium-term strategy allows for potential gains while managing risk through a well-defined stop-loss order. Given the 2-week price change and 1-week forecast for Binance Coin, an aggressive investment strategy should focus on a long-term approach. The historical prices show a consistent upward trajectory, with the current price hovering near its support level. The forecast suggests a potential price increase towards the resistance level, indicating a bullish outlook in the medium to long term. Therefore, a long position is advisable to capitalize on the potential for sustained growth. An ideal entry price would be around $622, aligning with the current price and recent support level. The stop loss should be set at $605 to protect against any unexpected price drops. The target price should be set at $660, aiming to capture the potential upside movement towards the resistance level. This strategy allows for a balanced approach, mitigating risk while maximizing potential returns in the medium to long term. Based on the provided historical price data and the 1-week forecast for Conflux, a cautious investment strategy is recommended. The price history shows a volatile trend with recent declines, indicating a potential bearish sentiment. The forecast also suggests a continuation of this downward trend, with prices potentially falling below the current level. Considering this, a short position on Conflux appears to be more favorable. An entry price of $0.158 aligns with the forecast's lowest point, allowing for potential profit if the price declines further. A stop loss at $0.162 acts as a safeguard against unexpected price surges, while a target price of $0.145 provides a realistic profit goal, considering the forecast and the support price. This strategy emphasizes risk management and capital preservation in a potentially bearish market environment. Given the price trends and forecast for Worldcoin, a cautious investment strategy would focus on a short-term approach to capitalize on the potential for price fluctuations. The historical prices show a moderate upward trend, with the current price hovering near the support level of $2.106. However, the forecast suggests a slight downward movement in the coming week, indicating a potential pullback. The resistance level at $2.394 suggests that significant upward momentum is unlikely in the short term. Considering these factors, a short-term short position on Worldcoin appears to be the most suitable strategy. A cautious entry price could be around $2.28, aligning with the current price and the potential for a slight downward movement. The stop loss should be set at $2.37, slightly above the recent high, to protect against unexpected price surges. The target price could be set at $2.12, aiming to capture a potential decline towards the support level. This strategy allows for potential profits from a short-term price correction while minimizing risk by setting a tight stop loss. Based on the provided Avalanche data, a medium-term investment strategy appears most suitable. The historical price data shows a clear upward trend, with recent fluctuations around the $35 to $38 range. The forecast predicts a continued upward trajectory, reaching around $40 to $45 in the coming weeks. This suggests a bullish outlook for Avalanche in the medium term. Given this, an investment strategy could involve entering a long position at the current price of around $35. A stop-loss order should be placed below the recent low of $33 to protect against unexpected downward movements. The target price could be set at $43, aligning with the forecast high and allowing for a healthy profit margin. This strategy capitalizes on the expected price appreciation while managing risk effectively. The medium-term perspective allows for a balanced approach, considering both the upward momentum and potential short-term volatility. Based on the provided historical price data and forecast for Jupiter, a cautious approach with a short-term investment perspective is recommended. The recent price trend shows a slight downward movement, and the forecast indicates continued consolidation within a relatively narrow range. While the support price at $0.9143 provides a floor for potential price bounces, the resistance at $1.1889 poses a significant hurdle for any substantial upward movement. Therefore, a short position with a tight stop-loss order is suggested. An entry price around $1.13 would allow for capturing potential downside movement, with a stop-loss set slightly above the recent high at $1.19. The target price could be set around $1.08, aiming to profit from the anticipated consolidation and potential pullback towards the support level. This strategy prioritizes risk management and capital preservation while seeking modest gains from the expected price fluctuations within the short term. EOS shows a consistent upward trend in its historical price, with recent fluctuations around the 67 cents mark. The forecast suggests further upward movement, reaching up to $0.783 within the next week. This positive outlook, coupled with the price's proximity to the support level of $0.7284, indicates a favorable environment for a long position. Therefore, an aggressive investment strategy for EOS would involve taking a long position. A suitable entry price would be around $0.700, allowing for a small margin of safety below the immediate forecast. The stop loss should be placed at 67 cents, protecting against unexpected downward movements. The target price can be set at 78 cents, aiming to capture a significant portion of the projected price increase. This strategy capitalizes on the bullish momentum and potential for growth in EOS, while mitigating risks through a well-defined stop loss. The provided data for TRON suggests a bullish short-term outlook. While there isn't explicit support and resistance data, the historical price shows a consistent upward trend with recent price fluctuations around the 20 cents mark. The forecast predicts continued upward movement, reaching $0.221 within the next week. Based on this, a long position seems most suitable for capitalizing on the potential price increase. An aggressive short-term investment strategy could involve entering a long position at $0.199, close to the recent price action and below the predicted peak. A stop loss could be placed at $0.195 to minimize risk in case of a sudden price reversal. The target price could be set at $0.215, aiming to capture a significant portion of the predicted upward movement. This strategy allows for potential profits while managing risk through a well-defined stop loss. SE shows a recent upward trend in its price history, with a forecast indicating continued growth in the coming week. The support price of $0.4927 provides a safety net, while the resistance price of $0.5695 suggests potential for further upside. Considering these factors, a long-term investment strategy appears promising for SE. Therefore, I recommend entering a long position at the current market price, which is slightly below the forecast. Set a stop loss at $0.4927, the support level, to limit potential losses. The target price should be set at $0.5695, the resistance level, to capitalize on the full potential of the upward price movement. This strategy allows for a measured approach to capitalize on the bullish outlook for SE while mitigating risk. Given the price trends and forecast for Shiba Inu, a short-term investment strategy appears most suitable. The historical prices demonstrate a slight downward trend, while the forecast suggests continued price fluctuations with a slight upward bias. The support price of $0.0000238 indicates a potential floor for the price, while the resistance price of $0.0000280 presents an immediate hurdle for significant upward movement. Therefore, a long position is recommended to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.0000247, near the current price, would be ideal. The stop loss should be set at $0.0000238, slightly below the support price, to minimize potential losses. The target price should be set at $0.0000258, aligning with the forecast and representing a reasonable profit target. This strategy allows for participation in the potential upward movement while mitigating risk through a well-defined stop loss. Given the provided price information for Dogecoin, a short-term bullish investment strategy seems most suitable. The historical price data demonstrates an upward trend, with recent fluctuations suggesting a consolidation phase. The forecast prices further reinforce this bullish sentiment, projecting continued growth over the next week. Therefore, a long position is recommended for Dogecoin. An optimal entry price would be around 38 cents, aligning with the recent consolidation and providing a buffer below the immediate resistance. The stop loss should be set at $0.365 to minimize potential losses in case of a sudden price reversal. The target price should be set at 43 cents, slightly above the highest forecast price, allowing for a healthy profit margin while leaving room for potential further upside. This strategy capitalizes on the anticipated short-term price increase while managing risk through a well-defined stop loss. Given the price trends and forecast for Hooked Protocol, a medium-term investment strategy appears most suitable. The historical prices show a recent consolidation phase, with the price fluctuating around the 40 cents level. The forecast suggests a slight upward movement, with prices potentially reaching $0.419 within the next week. However, the resistance level at $0.4376 indicates potential for a pullback after this initial upward movement. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $0.405, allowing for some room to absorb any potential volatility. A stop loss should be placed at $0.386, safeguarding against a significant price drop. The target price could be set at $0.426, aiming to capture a portion of the potential upward movement and capitalize on the price reaching the resistance level before a potential pullback. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided price history and forecast for Aevo, a short-term investment strategy appears to be the most suitable. While the historical price data shows some volatility, the recent 2-week trend suggests a slight upward momentum. However, the forecast predicts a consolidation phase with prices hovering around the 36 cents mark. This indicates that significant price movements in either direction are unlikely in the short term. Therefore, a long position is recommended, aiming for a modest price increase towards the resistance level of $0.391. An ideal entry price would be around $0.353, aligning with the current price and the recent consolidation. A stop loss at $0.344, slightly below the recent support level, would help mitigate potential downside risks. The target price could be set at 38 cents, allowing for a reasonable profit margin while staying within the predicted price range. This strategy capitalizes on the slight upward momentum while acknowledging the limited potential for substantial gains in the short term. Given the current price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent decline, with the current price hovering near the support level of $0.006893. The forecast suggests a continued downward trend, with prices potentially dropping to $0.00706 over the next week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline. An aggressive short-term investment strategy would involve entering a short position at $0.00753, aligning with the current price. The stop loss should be set at $0.007764 to protect against any unexpected price recovery. The target price should be set at $0.006893, slightly above the support level, allowing you to take profits before the market hits major support. Suncoin shows a fluctuating price trend over the past 2 weeks, with a slight upward movement overall. The forecast suggests a continuation of this upward trend, albeit with some minor fluctuations. Given these factors, a long-term investment strategy appears suitable. The entry price should be set at $0.0215, aligning with the recent price action and providing a reasonable margin above the support price of $0.01934. The stop loss should be placed at $0.0205 to protect against any unexpected downward movements. The target price can be set at $0.0231, aiming to capture the potential upside movement towards the recent high. This strategy focuses on capitalizing on the anticipated upward momentum of Suncoin. By entering a long position at a strategic entry price and implementing a well-defined stop-loss and target price, investors can potentially generate returns while managing risk effectively. The long-term perspective allows for the opportunity to benefit from sustained price appreciation over a longer time frame. Based on the provided Pepe price information, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend, with recent peaks around $0.0000232 and subsequent declines. The forecast price suggests a continued upward movement, potentially reaching $0.0000234 in the coming days. However, the relatively close proximity of the resistance price at $0.0000211 indicates a potential for a pullback or consolidation before further significant gains. Therefore, a short-term long position could be considered. An entry price around $0.0000206, near the current price and below the recent resistance, would allow for potential profit if the forecast price holds. A stop-loss could be set at $0.0000197, slightly below the recent lows, to limit potential losses. The target price should be set at $0.0000211, aiming to capture a portion of the anticipated upward movement before reaching the resistance level. This strategy allows for capitalizing on the potential short-term price increase while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for Toncoin, a medium-term investment strategy appears most suitable. While the historical prices show some volatility, the forecast suggests a gradual upward trend over the next week. The support price of $5.182 provides a safety net, while the resistance at $5.574 indicates potential for further price appreciation. Therefore, a long position is recommended to capitalize on this potential. An entry price of $5.30 would allow you to enter the market near the current price while providing a buffer below the recent support level. The stop-loss should be set at $5.19 to limit potential losses if the price drops unexpectedly. The target price could be set at $5.60, aiming to capture a portion of the anticipated upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in a volatile market. Based on the provided price information for Bitcoin Cash, a bullish investment strategy appears promising. The historical prices demonstrate an overall upward trend, with recent fluctuations around the $450 level. The forecast prices suggest continued upward momentum, reaching as high as $526 in the coming weeks. This positive outlook, combined with the relatively low support price of $440.20, indicates a favorable entry point for a long position. Therefore, I recommend a long-term investment strategy for Bitcoin Cash. The entry price should be set at $450, aligning with the current price range and providing a buffer below the support level. The stop-loss should be placed at $440.20, the identified support price, to minimize potential losses. The target price can be set at $515, the resistance level, aiming to capitalize on the forecasted price increase. This strategy capitalizes on the bullish trend and aims for significant returns over the medium to long term. Based on the historical price data and the provided forecast for Chainlink, a moderately aggressive investment strategy suggests a long-term position. The price has shown a general upward trend over the past 2 weeks, with the forecast indicating continued growth in the coming week. While there is some fluctuation in the short term, the overall trajectory is positive. Therefore, a long position is recommended to capitalize on this potential for growth. An entry price around $14.50 could be considered, allowing you to enter near the current price but slightly below the recent highs. The stop-loss should be set at $13.50 to protect against any unexpected downward movement. The target price could be set at $17.50, aligning with the resistance level and allowing for a reasonable profit margin based on the forecast. This strategy balances risk and potential reward, aiming to capitalize on the long-term bullish outlook for Chainlink. Polkadot's recent price history shows an upward trend, reaching $6.60 within the past 2 weeks. The forecast predicts continued growth, with prices potentially reaching $6.92 within the next week. Considering this bullish outlook and the support price at $6.359, a long-term investment strategy appears promising. A conservative approach would involve entering a long position at the current price of $5.92, with a stop loss set at $5.71 to protect against potential pullbacks. The target price could be set at $6.659, aiming to capitalize on the resistance level and the predicted price growth. This strategy allows for potential profit while mitigating risk by establishing clear entry, stop loss, and target points. Given the price trends and forecast for Near Protocol, a medium-term investment strategy appears promising. The historical prices show a general upward trend, with the price oscillating within a range. The forecast suggests continued upward movement, reaching approximately $6.35 in the coming week. The support price at $5.561 provides a safety net, while the resistance at $7.658 indicates potential for further growth. Therefore, a long position in Near Protocol is recommended for a medium-term investment. An entry price of $5.80, slightly below the current price, allows for some room for potential price correction before entering the trade. The stop loss should be set at $5.561, the support price, to limit potential losses. The target price could be set at $6.30, aligning with the forecast and offering a reasonable return on investment within a medium-term timeframe. Based on the provided information about stacks, a medium-term investment strategy appears most suitable. The historical price data shows fluctuations within a range, suggesting a period of consolidation. The forecast price indicates a slight upward trend, but the relatively close proximity of the support and resistance levels suggests a potential for sideways movement in the short term. A medium-term approach allows us to ride out these short-term fluctuations and capitalize on the anticipated upward momentum. An entry price around $1.95, slightly below the current price, provides a margin of safety. The stop loss should be set at $1.88, just below the recent support level, to minimize potential losses. The target price can be set at $2.22, aligning with the resistance level and representing a potential upside of approximately 14%. This strategy allows for a balanced approach, considering both the potential for gains and the need to manage risk. Aptos shows a recent price consolidation pattern, hovering around the $11 to $12 price range. While the 2-week price change suggests a slight upward movement, the forecast indicates a continued upward trend, with prices potentially reaching $13 in the coming week. This suggests a bullish outlook for Aptos in the short term. Considering the support price at $11.74 and the resistance at $13.70, a long position appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a long position at $11.90, slightly above the support price. The stop loss could be placed at $11.74, protecting against potential downside movements. The target price could be set at $13.50, aiming to capture a significant portion of the predicted upward movement. This strategy capitalizes on the bullish forecast while mitigating risk through a well-defined stop-loss order. Based on the historical price data and the forecast for Litecoin, an aggressive investment strategy would suggest a long-term position. The historical prices demonstrate a generally upward trend, with recent fluctuations suggesting a potential consolidation phase. The forecast indicates further price growth, reaching as high as $97. Although the resistance level is at $97.82, the consistent upward momentum and the support price at $88.26 suggest that Litecoin could potentially break through this resistance in the long term. Therefore, a long-term investment strategy with an entry price around $89 would be suitable. The stop loss could be set at $88, slightly below the support price, to mitigate risk. The target price should be set at $96, allowing for a significant profit margin while staying within the projected price range. This strategy capitalizes on the bullish outlook for Litecoin while managing risk effectively. Given the price trends and forecast for Uniswap, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend, with both upward and downward movements. However, the forecast suggests a consistent upward trajectory over the next few weeks, indicating a potential for growth in the medium term. The support price of $9.325 acts as a safety net, while the resistance price of $11.984 presents a potential ceiling for the price. Therefore, a long position is recommended for Uniswap. A strategic entry price could be around $9.45, slightly above the current price and near the support level. This allows for a margin of safety while still capturing potential upward momentum. The stop loss should be set at $9.25 to limit potential losses in case the price reverses direction. The target price could be set at $10.50, aiming to capitalize on the projected price increase towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the price trends and forecast for Bittensor, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $480.70. The forecast suggests Bittensor may consolidate around the current price levels, with limited upside potential. Therefore, a short position is advisable for a short-term investment strategy. An entry price of $500 would allow you to capitalize on a potential further decline towards the support level. The stop loss should be set at $518 to protect against any unexpected price recovery. The target price should be set at $485, slightly above the support level, allowing you to take profits before the market bounces back. Given the price history of Internet Computer and its forecast, an aggressive investment strategy would focus on a long-term approach. The historical price data shows a general upward trend, with recent fluctuations likely due to market volatility. The forecast indicates continued growth, with prices projected to reach $10 or even higher in the coming weeks. This suggests a bullish outlook for Internet Computer in the long term. Therefore, a long position is recommended. An entry price of $9.20, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $8.80 to protect against unexpected price drops. The target price should be $11.50, aiming to capitalize on the forecast and potential for further growth. This strategy allows for a potential profit while mitigating risk and taking advantage of the long-term bullish outlook for Internet Computer. Based on the provided price information for Artificial Superintelligence Alliance, a cautious short-term investment strategy is recommended. The 2-week price history shows a fluctuating trend with a slight downward bias. The forecast further indicates a continued decline in price over the next week, suggesting a bearish outlook in the short term. Considering this, a short position is advised. An entry price around $1.28 could be considered, aligning with the current price and recent price action. The stop loss should be set slightly above the entry price at $1.32, minimizing potential losses if the price unexpectedly rises. The target price should be set at $1.22, aiming to capitalize on the anticipated price decline towards the support level. This strategy allows for potential profit while managing risk by limiting potential losses. Based on the provided Optimism price history and forecast, an aggressive investment strategy would favor a long-term approach. The price history reveals a general upward trend, with recent surges above $2 and the forecast projecting continued growth towards $2.26. This positive momentum suggests a strong potential for capital appreciation in the long run. Therefore, I recommend a long position on Optimism with an entry price at $2.08, slightly above the current price to avoid immediate market volatility. The stop loss should be set at $1.97, below the support price, to minimize potential losses. The target price should be $2.26, aligning with the forecast's highest projection, allowing for substantial profit taking upon reaching the resistance level. This strategy capitalizes on the bullish outlook for Optimism and aims to maximize returns through a long-term investment horizon. Based on the Ethereum Classic price information provided, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, with the price oscillating around the $27 mark. The forecast indicates continued upward momentum, with prices potentially reaching $30 within the next week. This suggests a bullish outlook for Ethereum Classic in the short to medium term. Therefore, an investment strategy for Ethereum Classic could involve entering a long position at the current price of $27, with a stop loss set at $26.50 to protect against potential downside risk. The target price could be set at $29.50, aiming to capitalize on the anticipated price increase towards the resistance level. This strategy allows for a reasonable risk-reward ratio while aligning with the bullish price trends and forecast for Ethereum Classic. Based on the provided historical price data and the forecast for Ethereum name service, a short-term investment strategy appears to be the most suitable. The historical prices show a fluctuating trend with a slight downward bias in the past 2 weeks. The forecast indicates a potential for further price consolidation around the current levels, with minor fluctuations expected. Considering these factors, a long position is not recommended at this time due to the lack of a clear upward momentum. Instead, a short-term strategy could involve entering a short position at the current market price of around $19. The stop loss should be placed slightly above the recent high of $20, protecting against any unexpected upward price movements. The target price could be set at $17, aligning with the lower end of the forecast range, allowing for potential profit before the price potentially bounces back. Given the historical price fluctuations of Solana name service and the provided forecast, a cautious approach favoring a short-term investment perspective appears most suitable. The price history demonstrates a volatile trend, with recent dips suggesting a potential bearish movement. The forecast also indicates a downward trajectory over the next week, further supporting this outlook. Therefore, an investment strategy involving a short position is recommended. An entry price of $0.218 aligns with the current price and the forecast's initial decline. The stop loss should be placed at $0.225, slightly above the current price, to minimize potential losses if the price unexpectedly rises. The target price is set at $0.203, aiming to capitalize on the predicted price drop towards the support level. This strategy allows for potential profit while mitigating risk in a volatile market. Given the current price trend and the 2-week price forecast for Aave, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating pattern with a slight downward trend in recent weeks. However, the forecast suggests a potential upward movement in the coming weeks, indicating a possible reversal of the current trend. This suggests an opportunity to enter a long position, aiming to capitalize on the potential price increase towards the resistance level. An ideal entry price would be around $165, aligning with the support price and the lower end of the forecast. A stop-loss order should be placed at $156, the identified support price, to limit potential losses in case the price continues to decline. The target price could be set at $176, aligning with the higher end of the forecast and providing a reasonable profit margin. This medium-term strategy allows for potential gains from the anticipated price increase while mitigating risks through a well-defined stop-loss order. The provided data for Injective suggests a bullish outlook in the short to medium term. The 2-week price history shows a slight downward trend, but the forecast indicates a consistent upward movement, with prices expected to reach $28 by the end of the week. This positive forecast aligns with the current price hovering near the support level of $24.42, suggesting potential for a price rebound. Therefore, an investment strategy for Injective should focus on a long position. A suitable entry price would be around $24.50, allowing for some room to capture any potential dips before the upward trend gains momentum. The stop loss should be set at $24.40 to limit potential losses in case the price drops below the support level. The target price could be set at $26.50, aiming to capture a significant portion of the expected price increase. This strategy combines a relatively low risk with a good potential for medium-term gains, capitalizing on the bullish sentiment surrounding Injective. Given the provided price information for Polygon, a bullish short-term investment strategy is recommended. The historical price data shows a fluctuating trend with an overall upward movement. While the forecast suggests a continued upward trajectory over the next week, reaching prices around $0.508, it's essential to manage risk. Therefore, an entry price of $0.450 would allow you to capitalize on the potential price increase while minimizing risk. A stop-loss order should be placed at $0.430 to protect against any unexpected price drops. The target price should be set at $0.500, aiming to capture a significant portion of the projected price increase. This strategy focuses on the short-term potential of Polygon, taking advantage of the positive forecast and historical price trends.